Okay, time to make another video. It's been a while after changing over to a VPS, and that took me some time, and then learning a little bit about writing some strategies with NinjaTrader. That became a bit consuming, learning to get it to compile, and yeah, I feel like I'm behind the times on that, but yet at the same time, I am kind of stoked that I was actually able to do it. Um, And that being said, the microphone connection. Anyway, there's just been a lot of technical stuff that's been super distracting and kind of a drag. Um, Getting all the licenses to get back over to the VPS, and then getting the microphone to work with the VPS, and I just decided to do these videos on the straight laptop because it's not necessary for trading and stuff. But um, as you can see, the calculating for NinjaTrader is a little bit slow, and that was definitely a major issue for me. But I may have to pause this video because, oh, there we go. Good deal. So, buy the dip. Yeah, I mean, we had that big 1 day sell off and some nice volatility here for a few days. And then, we're basically all the way back to where, that 1 day sell off was. So, continues just massive bull market, buy the dip. Just, it's just a waste of time to be short. Um, there's like a 15-minute candle, and then I mean, look at this from all of September pretty much. Just and then a little bit of sell off, and and we're just in a massive bull market, and so you know, just it's just a waste of time to be bearish, in my opinion. Um, we have this 5 day trend with the daily, which was supporting the the 8 EMA for almost 6 months, and we had a break of it. But then, I mean, if you were to look at, I mean, I see, 30-second, 1 minute, 2 minute trend trades during the middle of the day that look exactly like this 5 day chart. And so, um, people are like just buying this 8 EMA, and they've got their stops below an 8 EMA, and then it does its wrench, and the buy zone is between the 8 and the 20. So, um, so yeah, they were all good through, almost 6 months of just buying the 5 day EMA. So what does this all mean for now? Well, yeah, going back to, I'm going to go to the 120-minute now, because this has been a very good chart to kind of buy oversold conditions, especially on like an RSI. If you were to buy, like, when the RSI is down here at the 30 level, it at any of these rinses, it's paying, immediately in the green. It might take a few days for it to really go, but you're pretty much immediately in the green, or just bouncing around the your entry price. So yeah, I mean, we're pretty much all-time highs, and today we had this wick, basically forming a bull flag here today, and on this Fibonacci retracement of down here to that 67.11, was perfect at the 61.8%. So now, really, all we're trading now is like this right here. Really tight range. It looks like it's putting in a bull flag. So potentially, with that being said, the smaller, it's coming into a diamond here, very tight. And there's earnings this week, so that's why things are just going sideways. There's some big earnings this week, but there really is no news until Friday because most of the economic news has been just postponed anymore for the 8:30 Eastern Standard Time alerts. I mean, excuse me, uh, high priority news events. So, but it seems to be the continual pattern of just these bust ups, and then you'll get these trickle fades for a while. I only trade long, so it kind of sucks to be sitting here in the morning in those trickle fades. My favorites is when you wake up to the trickle fade and the 15-minute RSI is oversold around the 30, and we're sitting at a major Fibonacci level, and then we know that we're going back up. So this morning was a pretty good one. You have kind of an oversold 15-minute RSI. Then you have everybody's long here. They've got their stops below this. Comes down, rinses everybody's stops out, goes through the high of the day. See this pattern over and over and over and over and over again. And so what does that all mean going ahead? I'm using the same strategy that there's just way more bull patterns. There's no, the bears don't they gotta cover really fast if anybody gets bearish. I mean, this thing went down and got below the 5-day 20 and stuff, and then consolidated here sideways, and then just bam, 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 right back up above it. So I see these patterns continue to happen intraday, and so it's really, I'm just looking for the rinse out levels here, you know, and then so now we have this pattern that, as I said before, we're just forming this bull flag, and you know it's just going sideways now. There's the breakout. Oh, it's gonna go, rolls back over. So, but like I said before, it was pretty perfect on that 61.8% here, previous day low. We got all this going on. I really like this multi time frame tool from Predator X. It's just it just uses a lot of resources in NinjaTrader, so I can't use it intraday. Every time if I change the chart at all, it really slows it down. But I guess if you don't change the time frame minute, it's probably fine. So we're going to see what happens if this 67.59 gets taken out. But just on a 15-minute chart, this is forming another bull flag. And lined up perfectly with the 61.8% for that previous day low. So Fibonacci is continually being prescriptive and valuable. So what does this all mean for tomorrow and the rest of the week? Well, I expect the market to continue to kind of just build this bull flag right now, and then as earnings get reported, you know, there'll probably be some gap ups and maybe even some gap downs. But I'm going to guesstimate that the gap up will be faded, the gap down will be bought, but that we continue to go sideways and into the end of the year very bullishly. So levels for tomorrow, I'll be looking at, I know there's earnings, I'm not really keeping track of it, I just know that they're happening this week. So if we gap up, I'll be looking for a sell fade, and then to see if this 67.84 provides support. If we break down below the 61.8%, I'll look for this 67.37 as a bounce area. If we go below the current weekly low and start to wick it out based on an earnings things, I will look for this 66.71 as a bounce area. You can see previous resistance, broke above, retested, broke out. So these were all just kind of, but I don't anticipate going it below previous weekly low. If we want, you can use that as also a macro. And interesting to see how that 38.2% lines up exactly right in here at that 66.55 level, and how, yeah, there's a rinse below there. So yeah, I just keep looking for the rinse outs by the dips, and then once they break out, I wait for the sell fade and buy the support retest again. So that's the plan. Trade them well.